It has been a momentous month in America. On this special edition of Money and Markets, we break down 3 pivotal events that have changed the political and economic landscape and tell you how they'll affect the markets and your investments going forward. On November 2nd, Republicans took control of the House of Representatives and cut into the Democrats' majority in the Senate. Mike Larson, Monty Agarwal, and Brodrick will discuss the election's implications for all asset classes. Then Steve Chapman of Weiss Capital Management joins in with his take on the Federal Reserve's decision to pump even more money into the financial system. Will it prop up the economy as intended, or will it fail, like the Fed's first round of quantitative easing? And finally, we'll discuss the latest employment report with Mike Larson and Euro-Pacific Capital's John Brown. The U.S. economy added more than double the number of jobs than expected in October. Does it signal a turnaround for the labor market? Plus, we'll give you concrete ideas for taking advantage of the new realities in the marketplace. All that and a closing comment from Martin Weiss coming up right now.
From our studios in Jupiter, Florida, Weiss Money Network presents Money and Markets. And now, Jamie Holmes.
Hello, everyone. Let's jump right in and talk about this month's first big event, and arguably the one that will have the greatest long-term impact on the economy and the markets. Of course, we're talking about the midterm elections. Mike Larson is with us on Skype from Munich, Germany. He, of course, is a financials and interest rate analyst at Weiss Research and the editor of the Safe Money Report. Joining us here on set, Brodrick, a small cap and natural resources specialist and the editor of the Crisis Profit Hunter newsletter. And Monty Agarwal, who is the editor of the Rapid Growth Portfolio. It is so good to see all of you. Thank you all for joining us here today. Monty, I want to start with you. What does a Republican takeover of the House actually mean to the economy on a macro level?
Thank you, Jamie. Obviously, this has been a very big election for the Republicans. And the thing you have to consider is, how did the Republicans get here? And it's on the back of the Tea Party movement. What does the Tea Party movement stand for? It stands for austerity. No more government stimulus packages, save the dollar. And really, the Republican Party is going to be looking forward to the big elections coming up in 2 years' time, the presidential elections. So you can expect the philosophy of the Tea Party movement to continue over the next 2 years. Now, on a macro level, what that means is, with no more stimulus packages, you can expect to see the dollar stabilize to perhaps rally in the in the short term, before the long-term fundamentals kick in again, and you can start to see the dollar continue on its long-term decline. Because I do not see, given the austerity packages and given the weak economic data, I don't see the U.S. economy gaining major steam.
Mike, what's your take on the Republicans winning the House?
Sure. Well, I think what the Republican victory is going to do is that it's going to negate the possibility of having any more fiscal stimulus coming from Congress or the Obama administration. The Republicans just aren't going to play ball. So what you're likely to see is that the Federal Reserve, on the monetary policy side of things, has to step up to the plate, or at least in Bernanke's mind, they have to step up to the plate. So I think with stalemate in Congress as a result of this, you're going to see Bernanke's impulse to be to print more money, which arguably over the long term is bad for the dollar, it's good for gold, it's bad for long-term bonds. Those prices should go down and interest rates should go up. And it's potentially bullish for emerging market stocks and other stock markets that are going to be the beneficiaries of all this easy money the Fed's printing.
Sean, you and I were talking a bit before the show, and you don't think a Republican takeover of the House is that big a deal.
No, well, first of all, they won't take their seats until January, so anything they can do won't really happen until then. But even then, I mean, yes, the Republicans came in on the Tea Party wave, which is absolutely true. However, the Tea Party was bankrolled by a couple of oil billionaires. Their policies probably won't be that different from the normal Republican policies. We might see a lifting of, like, regulation from the financial industry, so the financial industry could do well. And we might see the energy industry do well, which I have no problem with at all. But I don't think it'll have that big of an impact. What I think will have more of an impact is I'm seeing the potential setup for a U.S. dollar rally here. Now, longer term, I'm very bearish on the U.S. dollar. I think it's going lower, but nothing goes in a straight line, and this thing could zigzag higher. And why that's important is, at least within recent memory, we've seen that when the dollar goes up, stocks go down. And so we could see the U.S. dollar rally for 1 month, 2 months, 3 months, I'm not sure exactly, but that would tend to send the stock market lower at the same time. And this could happen even though we're seeing good news in the economy now. I expect that for like the next 6 months or so at least, we could see the U.S. economy continue to pick up, head higher, and we could see the dollar go higher at the same time, and yet we could also see the stocks go down at the same time. Many people think that the economy and the stocks have to move together. They don't have to, and so that's one thing we could see going forward.
Monty, you agree? Where's the dollar going and where are the stocks going?
Yes, I do, because what's going to happen is, what's happened in the short term, with the dollar sell-off and the euro rally, a lot of the currency traders have made a lot of money. And remember, we're coming to the end of the year, the bonus season. So a lot of these guys that want to bank their bets, take some of the chips off the table. So in the short term, I do expect that the euro could go test a technical level of around 133 before the long-term fundamentals kick back in and we see the dollar start its next major leg downwards. Now, as what the investors have done is, with all the new money printing, they have sold the dollar, bought foreign currencies, bought foreign stocks. And now you could see the reversal of that, which is people stop selling the dollar as they take the profits off, and therefore you might see the U.S. equity market retrace some of those gains that it has made. And the foreign equity markets retrace some of those gains that it's made before the long-term fundamentals kick back in.
I just want to touch on that. One of the positions that I've recently put my subscribers into is to be short the euro, because as he said, you know, if the dollar's going up, the euro is probably going lower, and that's probably one of the easier bets you can make. And also, just to touch on something else that he spoke about, the global commodity picture, I mean, that bull market is still in place. This is a short-term pullback, if we get one, in the global commodity bull market. And that's a great time to add new positions. It's opportunities all over the place. What I'm doing in my own portfolios is I'm raising my stops on, you know, all these commodity positions I have. And if we get stopped out, that's okay. We can always add some later on. But maybe other people are doing the same thing. So if we see the prices of commodities come down and start to hit those stops, then we could see a real selling wave taken. And that could bring us to an opportunity that we haven't seen for years. That would be a time when you really want to pick things up, because the big trends are still there, and we'll probably see them play out over the next couple of years.
You agree with Sean? I know he's real hot on silver. You think the commodities markets are going to be the place to play?
Yes, not just the metals, but I'm actually very bullish on the agricultural sector for various reasons. One, the ags, as we call them, are priced in dollars. So as the dollar, with a long-term view, as the dollar goes down, that's bullish for the agricultural prices. One. Two, the global demand, increasing demand from Asia. And three, a lot of people don't think about this, is the strengthening currencies of Asia, of China and India. What that does is it increases the global purchasing power of the Asian consumer. Everything else being the same, they can buy more. So these three factors all are pointing towards a bullish scenario for not just the metals or the energy sector of the commodities, but also the agriculture sector.
Just to build on that, recently we've seen news out of China that yes, their agricultural production is going up, but their demand is increasing at a much faster rate. So they're having to pull in agricultural products from around the world, including the U.S. This is a trend that's probably going to continue to play out. We're going to see food inflation, not only in Asia, but also here in the U.S.
Mike, how do you think the elections are going to affect the economy?
Sure. Well, just like what Monty and Sean were talking about earlier, this really sets the stage for a longer-term dollar decline and a rise in the markets that tend to move in the opposite direction of the dollar. That would be things like gold, silver, other metals, commodities, agricultural commodities, and emerging markets. You have to understand, again, what the Fed is doing is creating all this cheap money to benefit the U.S. economy, but here interest rates are so low and growth is so anemic versus what's going on overseas. So all of that easy money isn't staying parked in the U.S., it's flying out there, it's really spewing out there into these other markets that are doing much better, and I think you're likely to see that continue.
Thank you all for your time. Mike is going to stay with us for the rest of the show to comment on this month's other big events, last Tuesday's Federal Reserve decision and Friday's employment report. If you have questions or comments about any of those topics, just email us at weissmoneynetwork@weissinc.com. We may not be able to respond to all of your emails or address them on air, but we're keeping everything on hand for future episodes, and we appreciate the feedback. We'll be right back in a moment.